Let's take a moment, look at the disclaimer. This content is for educational, informational, and entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We are here just to tell you how BTA look at the market, how we analyze the markets, but nothing should be taken as a recommendation. This is Rod from BTA, and we are the middle traders. Now, this is part 2 of the Weekly Bollinger Band Strategy. Okay, we're going to look at, the SPY. We're going to start off with the SPY for the second part. And then we'll go into the Qs. And hopefully we have enough time. I don't want to make them too long. We have enough time to go into the other two major index ETFs. All right, so this is the weekly chart of the SPY, the SPY, the ETF that tracks the Standard & Poor's 500, what we'll be using to trade when we want to go long or short the Standard & Poor's 500, right? So here we have our weekly Bollinger Band up top. Here's our Bollinger Band. These are our price bars, right? So last week, which is this week right here, the spread's a lot tighter, okay? So we talked about that in the first part. So right now, what we want to do is look at the pivot point right here. So for the SPY, the close, which is going to be our pivot point, the close of the signal week, right? The close of the signal week is our pivot point. So that will be the close of this week here. That's 415.38. The close of this week right here is 415.38. That's our pivot point. Okay, that's our pivot. And we are right now we closed at 410. So for the SPY, the pivot point is 415.26. Okay. Now, what's our risk? Because we always want to look at the risk right away. Okay. So let's put a horizontal line for a minute right across our pivot point, close as possible. It won't be exact. We know the exact pivot for the SPY is 415.26. So we put a horizontal line across here. That's that represent our pivot point, right? So we hit our pivot. If we hit our pivot, if prices can any day during the week next week, if prices can close above, look like it's about to close above the pivot point, then that'll be our signal to go long on the SPY, right? On the weekly Bollinger Band strategy, right? Okay, that's fine. If we do that, then the low of last week, because we're gonna start a new trading weekly trading bar over here, starting tomorrow, which will be Monday. We'll start a new weekly trading bar, right? Over here, okay? Which will be Monday, June the 6th, 2022, right? That'll start our new, we'll open up somewhere over here, and then prices will start trading all next week. If any day during the week next week, and it looks like it's going to close above the pivot point, then that will be our signal to go long, right? To take a position. Okay, mind you, we're going to be watching some other moving averages before we pull the trigger. But I'm just saying, just for the pivot point, that would be our pivot point, right? Now, what's our risk? Well, the risk will be the low of last week, because remember the trading plan that we have, right? Prices should never come back and break below the low of any previous week. We know that. So if it does that, then that's a signal for us to look out and to get out. That's our out maximum stop loss, right? So now, if we use the pivot point as our entry and the low of last week as our maximum stop loss, for the SPY, we got a spread of $8.33. That's our maximum loss right there, $8.33. That's the most we're willing to lose on this trade, okay? So that's a lot tighter spread than what it was before. It was around $28 the spread was before when we during the second week of the trading plan. So right now we got an $8.33 spread. Fine. So if we hit the pivot, we know for our maximum loss, the most we're gonna lose on this trade is gonna be $8.33. That's the low of last week. But now we got some things to look out for. So even if we hit this pivot, before we go there, look at the RSI down below. Okay, if you can see, the RSI tried to get above the center level, the 50 level, which is this horizontal dashed line. That's the 50 level. We tried to get above 50, and we kind of got rejected over the last 2 weeks. It's moving sideways. It's at 41.83 right now. We would like to see that get above 50 at some point, especially if we go long the SPY, right? Because that's telling us we're on the right side of the 50-yard line. The buyers, the bulls, are now trying to take control of the momentum. On the stochastic down here below, we've been got our bullish crossover. That's great. And the stochastic is back above the 20 level. We at 30.18. So that's wonderful. But what we want to see that stochastic also get up there and get above the 50 level. That'll be telling us that we closing on the right side of the trading range, higher and higher within the range. And eventually we would like to see this MACD down here, histogram, getting lower. These bars here getting smaller, and eventually start turning green, and we get this here, this MACD to give us a bullish crossover eventually. All right, we want to see that bullish crossover on the MACD, but that's going to come a lot later because we know that's a lot slower indicator than the RSI and the stochastic. So now, as far as going back to the price, because price is the only thing that pays, right? The RSI, stochastic, MACD, those are all indicators that we look at after price. Price is the only thing that pays. So now, let's analyze price action. If we break above the pivot point for the DIA, if we break above the pivot point, we need to keep an eye on that 8-week moving average, what we was talking about all last week, okay? That 8-week moving average. So let's minimize this now. We know where we at with the SPY on the Bollinger Band chart. We already identified our risk, but now let's look at these moving averages, okay? So now, okay, here's our moving averages for our weekly. This is our weekly chart of moving averages for the SPY, right? Look at that 8-week moving average is what was giving us overhead resistance all last week, right? All last week, that 8-week moving average was giving us overhead resistance. We closed below it. All right. We opened up right on it last week, but we closed below it. All right. We need to get above that 8-week moving average. If we can get above that 8-week moving average and close above that 8-week moving average, then we're going to be taking the trade. We got to close above the 8-week. But right now, the 8-week is below the pivot point because the pivot point is the pivot point for the SPY is 415.26, right? 415.26. The 8-week moving average, okay, let's get a price point on that. The 8-week moving average is at 413.04. 413.04. And our pivot point is 415.26. So if we hit the pivot point, we're already going to be above this downward trending 8-week moving average. That's good, okay? And then we can monitor that 8-week as a stop area, an area of concern if we start breaking back below it. So we break above the pivot, we're already above the 8-week. Then we got to monitor this 13-week moving average, which is up there around this yellow line right here is our 13-week moving average. That's at 324.78. Okay, so that's at 324.78. The pivot point would be 315. So what we talking about? Somewhere close to $9, $8-9. Okay, and then we're gonna have to be concerned about the downward trending 13-week moving average. So that's how we're looking on the spot. The beautiful thing, if you look at the 100-week moving average, which is right here, which is this purplish magenta looking line, I guess, the 100-week moving average is right at 407. Okay, it's right at the low of last week. Okay, which would be our maximum stop loss. The low for the SPY is at our second stop, our maximum get out, no question asked for the SPY is 406.93. The 100-week moving average is at 407. It's a little bit above that. And then we got the 4-week moving average right here, which is at 404. Okay, our maximum stop is at 406. So that's good. We got our low from last week, which is our maximum stop. We got a 100-week moving average right below it. Okay, that should hold that support, hopefully. and then we got our 4-week right below it. That's great. That's some wonderful stop loss areas. We got the low of the last week. Okay, we know according to our Bollinger Band strategy, we should never break back below the low of any previous week. But besides that, we got that 100-week moving average. We got that 4-week moving average all right there together. Okay, it's all right there together, and that's a good thing. Okay, that's what we want to see. So we can manage our risks very carefully. And if we look at the DIA, just to go backwards a little bit, the DIA is the same thing. The 100-week moving average, okay, is right there. Okay, we talked about it in the last video. The 100-week moving average is right there as support, and the 4-week moving average right there support is all right close to the low. It's all right close. The 100-week, the 4-week, the low of last week for the DIA is all right there together. That can give us a very tight, okay, stop loss, some good stop levels, some good resistance areas. Support areas that if prices is to bounce, it should hold those 100-week, 4-week, and that low of the previous week. Okay, so that's good. So the SPY, going back to the SPY, okay, we have some really good levels on the SPY. We have some really good levels on the weekly chart for support on the DIA. That downward trending 8-week moving average, we would like to get above that and see that flattening it out and turning up a little bit if possible. Now let's go down to the daily chart for the DIA real quick. Let's go down to the daily chart and look at the moving averages on the daily chart, okay? So here's our moving averages on the daily chart, all right? Here's our moving averages on the daily chart. And let's zoom in a little bit so we can see that, okay? So look at that 21-day moving average. That 21-day moving average is at 408. The 9-week moving average is at 408.20. The 21-day moving average is at 408.06. So we got all our moving averages right here. We got the 5, the 9, and the 20. The 5 is a little above it, but we got the 9 and the 21-day right below price, and they're sitting right around 408. Okay, the 9 and the 20-day is sitting right around 408. Well, let's go back to that weekly chart. Okay, let's go back to the weekly chart, and we see that the 100-week moving average is right around 407. So 408, 407, you know what I'm saying? The 4-week moving average 404. So if we close below the 100-week moving average, which is at 407, okay, going back to the daily chart, okay, we'll be below the 21-day and the 9-day moving averages that's sitting right around 408. So the 21-day moving average on the daily chart, the 100-week moving average on the weekly chart, these are all levels that is very key support levels. And it's similar for the DIA, because look, on the DIA, the 21-day moving average is 326. The 9 is 327, 326 and 327. If we go back to the weekly, the 100-week on the DIA is 325. Okay? So 325 right there together. It's all right there together. So that's wonderful. That's what we want to see. These support levels sitting right below price. So for the SPY, for the SPY on the weekly chart, we got the 100-week moving average 407. The 4-week 404. 407 and 404. If we go down to the daily chart, we got the 21 and the 9 is sitting right around 408. So the 100-week, the 21-day moving average on the SPY is key. Okay, those are key. Now, so we got good support. We just got to watch out for the overhead resistance. We want to see, at least on the SPY, it's not as close as it is the downward trending 50-day moving average, and the 13-week moving average is not as close as overhead resistance as it is on the DIA. So we need to watch those levels, okay? But we'll be talking about it all next week as we monitor the trading action. So that's the SPY. Let's look at the Qs. Okay, that's the SPY. Let's look at the Qs real quick. Let's go to the weekly chart of the Qs. Okay, let's go to the Bollinger Band. Let's go to the Bollinger Band workspace, and let's clean it up a little bit. So here's the Bollinger Band. All right, let's zoom in on this price action a little bit here, right here. All right. So here's the Bollinger Band. And we kind of see the same thing with the Bollinger Band as we saw with the other ETFs, right? The spread is a lot tighter. That's great. Okay. It actually closed, the Qs actually closed almost right to the pivot. Okay. So let's put a horizontal line right across the pivot point. So the pivot point, this horizontal line is not exact, right? It's not exact. I wouldn't just use that as a reference, but I would tell you on the Qs, the pivot point is 309.10. 309.10. The high of the signal week was the close of the signal week was 309.10. That's our pivot point. We closed last week on the Qs on 306.20. So we closed about $3 below the pivot point. So of course, we're looking at a weekly chart with the Bollinger Bands of the Qs, right? So the spread is a lot tighter. We can manage our risk a lot better. So from the pivot point to the low of last week, which would be our maximum second stop loss, out is over. We out, done. For the Qs, it's $5.71. So that's lower than the spread, okay, on the DIA, and is lower than the spread on the SPY. So far the Qs have a $5.71 spread. That's not bad. That's our loss, our maximum loss that we'll take on the trade. We can manage our loss, manage our risk a lot better now than it was for the second week. A week ago, the spread was on the Qs. The spread was almost $26. So this is a lot better. So we don't even really have to step down to the daily chart and use the 21-day moving average as our stop loss, because now the spread is a lot tighter. Okay, so if you look at the RSI, okay, so we know the pivot point, we know the spread. If it breaks back below the low of the previous week, we know what we got on the spread. Okay, we know what our risk is: $5.71 for the Qs, $5.71 for the Qs, right? And we're out. All right, but keep track of our Bollinger Band strategy, our trading plan. We know if we break back below the pivot point, we're going to be selling half to reduce our risk and everything like that. But for the most part, let's look at the RSI. It got below 30. We know that. But look at that. The RSI started going up, never really made it too close to 50. Okay, to the horizontal 50 level. That's our 50-yard line. We want to get on the right side of that. If we're long, we want to be up top, because that's telling us that the buyers, the bulls, are taking control of the momentum, right? But look where it's at. It's at 37.74. It actually started trading up and is getting flat and kind of leaning back down a little bit, pointing back down a little bit. We don't want to see this start turning around and going back toward 30. That's telling us that the bears, the sellers, are definitely controlling the momentum. And the momentum is going to the downside. We don't want to see that. We need to see this start turning around, especially if we start talking about taking the pivot, right? And taking a long position. Now, let's look at the stochastic. We got our bullish crossover right here, the blue line crossed above the red. But look at it now. We got above the 20 level, but it is also flattening out. And it's at 23 right now. It's not moving upward. If the stochastic start moving up, that's telling us that we're closing higher and higher within the trading range, okay? Higher and higher within the range over the last 14 weeks. It's not telling us that now. It's kind of flattening out. So we see the momentum on the weekly chart starting to flatten out on the Qs. We see the stochastic, the momentum in the stochastic starting to flatten out on the Qs. So that's not good. And the Bollinger Band, the weekly MACD, all right, we are definitely pointing down, and we don't even look like we're anywhere close to where the MACD line, the brownish line, is going to cross above the signal line to give us that bullish crossover. We're not even pointing toward that. And the histogram bars are still kind of long on the downside. The histogram, these red bars are still kind of long. That's telling us that the momentum is not really coming in. So everything on this weekly chart is telling us the momentum is starting to flatten and not really coming in. So we got to watch price and we got to watch the momentum. Let's look at the moving averages, okay, and see what what kind of overhead resistance we got. We know all last week we was watching that 8-week moving average, right? We was watching that 8-week moving average. That's our thing, that 8-week moving average. Look how that 8-week moving average is pointing straight down, okay? That 8-week moving average is pointing straight down, the green line, okay? So, and we didn't close above it last week. So we got to see it get back above the 8-week moving average. The difference here between the Qs and the rest of the ETFs that we looked at the DIA in the first one, and we just looked at the SPY. The difference between the Qs and those two is, notice the 8-week moving average. Those other ones, the DIA and the SPY, the 8-week moving average was below the pivot. Right here, the 8-week moving average is above the pivot. Okay, so on the other ETFs, if we broke the pivot point, and we broke above the pivot, we pretty much was already, and we closed above the pivot, we were pretty much already closing above the 8-week moving average. That's not the case on the Qs. That's not the case. We got to close above the pivot, and we got to get now above the 8-week moving average, because the 8-week moving average on the Qs, okay, is 311. The pivot point on the Qs is 309. So unlike the other two, where the 8-week was below the pivot, on the Qs, the 8-week is above the pivot. So we got to get a close above the pivot point, the close of the signal week, which is 309.10. 309.10, and then we got to get above the downward trending 8-week, okay, which is at around 311.53. So we got some work to do on the Qs, and that momentum is looking like it's coming out. If you look at the volume, down here, the weekly volume bars, you can see they're getting lower and lower and lower, okay? So the volume is not really coming in on a weekly basis either. And then we got the 13-week overhead resistance right here, the yellow moving average line, which is at 326.04. But we got a lot to get through before we get there, okay? We got a lot to get through before we get there. Now, that's the Qs. Let's look at the DIA, the SPY real quick. I just want to show you something that I didn't point out earlier in the SPY that I just showed you with the volume bars. Look at the volume. Look, this is the weekly chart of the SPY. Look at the volume. Every week the volume is getting lower and lower. When we're trying to go up, not a good sign, okay? So the volume is getting lower and lower and lower, even on the SPY, okay? Even though the Qs is looking the weakest right now, the volume is still lower on the SPY. And let's look at the DIA, okay? It's not looking much better, okay? Look at the weekly volume bars down below. We always look at the daily volume bars and the daily on-balance volume, but look at the weekly volume bars, okay, down here. It's a lot lower when prices is trying to turn up on the weekly charts. That's not good. That's what I'm telling you. The volume is going to tell us whether or not the large institutional investors are actually coming in. And we need those guys and girls to come in order to push this thing up, okay? In order to push this thing up. So you see that on the volume bars is not coming in. You see that on the weekly chart. And right now, that 8-week moving average is above the pivot. So we got to get above all of this on the weekly chart before we pull the trigger. So the Qs got some work to do, okay? At least on the other two, we see that if you get above the pivot point, you're above the 8-week, right? But that's not the case on the Qs. Now let's go down to the daily chart, okay, and let's look at the 21-day moving average. It's right at support. That's what we want to see, okay? The 21-day moving average is below the price, below the closing price, below the low, pretty much the low of, not quite below the low. The 9-day moving average is below the low of the low of Friday's close, okay? So we got the 9-day moving average right around 304. We got the 21-day moving average. Let's see where that's at, okay? We got the 21-day moving average is at 305. The 9-day is at 304. Okay, we got 304, 305. And then on the weekly chart, okay, the low, okay, which is our get out no matter what, is 303. So we got 303, 304, 305. It's all right there together. And look at the 4-week moving average, which is the white line. It's at 301. So 1, 2, 3, 4, 5, 301, 303, 304, 305. You get the picture. It's very tight stops here. We start breaking below all of these key support levels. We got a problem with this chart. And we're going to always go back and look at lowest. We're going to look at lowest for all of them later on, but lowest is at 304.02. So I don't have to tell you. You see it. We got support, key support, the 9, the 21 day, the low of the previous week, okay? The low of the previous week, last week's low on the weekly chart, the 4-week moving average is all right there together. Support is right there. Overhead resistance is right there. Okay, we have to be careful. We see the pivot point, but we got to close above the 8-week moving average. We see the momentum and the volume is very low. Okay, the momentum is looking weak and the volume is low. So we got to be careful. Okay, so that's the cues and the SPY, right? That's the cues and the SPY. We did the DIA, the first part. We just went over the cues and the SPY. We know we got to get above that downward trend, the 8-week moving average. We got to get above the pivot point, but we got to close above that 8-week. Okay, the volume is low. Volume is low and trending down on all the weekly charts. The on-balance volume, the volume is coming out on the daily charts. Okay, the 50-day moving average, the downward trend of 50-day moving average on the cues is pretty far away from price, but we still got that daily trading range. When we look at the walk with the market, okay, walk with the market video, right? We talked about the sideways movement for the last 4 days. We got to watch that 414 level right here, the high of that sideways consolidation, 414.56. So we got a lot to watch here, y'all. We got a lot to watch. We have to keep our eye on everything moving right now. Look, we're going to be talking about this stuff all next week, okay? We're going to be monitoring this all next week, but we got a lot to watch out for. This market could get rejected and roll over. We have to be careful. Look at the 13-week moving average, the downward trend of 13-week moving average on the Qs. It's pointing straight down, okay? Downward trend of 50, downward trend of 13-week, downward trend of 9-week. Volume is not there on the weekly price bars, volume bars. Look, momentum is starting to slow on the weekly price bars. Momentum is slowing on the weekly momentum indicators. Look, y'all, let's be careful, all right? So now we're gonna stop this here for part 2. All right, we're gonna finish up with part 3 doing the IWM and the ITOT. Hopefully it'll be very quick, not too long. But the ITOT and the IWM is what we're gonna do next in part 3. So look out for part 3. Okay, see y'all in the next video.